Now, nearly every day you see a new article, a new video, a new tweet about how the market is really hot right now. It's higher than it's ever been before. The economy is booming right now. We are in a hot market right now. You don't want to just invest and then start losing that money. So then that kind of begs the question, should I jump into the market right now, or should I just wait until it starts to dip down? So that's what we answer in this video. So in this video, I'm going to go over 4 things. I'm going to go over who should be investing in the markets, who shouldn't be investing in the markets, and if you wish to invest, how to enter the markets, and then finally we'll close it out by how to kind of prepare your investments for the upcoming recession. So that's what we're going to be talking about in this video. Let's get into it. Lots of good information here, and this is a topic that I am excited to talk about. So let's get into it. And if you're new here, my name is Calvin Rabb. Here I make videos all about personal finance, so if you're interested in anything like that, I would love it if you would subscribe. First topic I want to go over is who should be investing in the markets right now. And in my mind, the people that should be investing are the long-term investors. So this is people whose investments, when they think about their investment portfolio, they are thinking in terms of decades. So meaning they're looking 20, 30, 40, 50, even 60 years out. And if you're looking that far out when it comes to your investing career, then it's okay to jump in now, because even if it dips, you don't care about the short run. You're here for the long run. And we know the business cycle goes a little bit like this. It kind of got its booms and busts, but in the end, it goes up more and more. And that light just turned off. But it keeps going on up and up and up. So if you're in it for the long term, then it is okay to jump into the market. For me, this is through my Roth IRA. That is my long-term plan. I don't plan on retiring anytime soon. I am 20 years old. So I am totally fine putting money in my Roth IRA. I don't really care what the stock price is or the investments that it's making right now, because I am here for the long run. So now let's flip it from who should invest in the market to who shouldn't invest in the market. And in my mind, the people that shouldn't be investing in their market is if you are a short-term investor, meaning you hope to take your money out and use it in the next maybe 2 to 5 or 6 years, because that's usually when we expect kind of this sort of recession or correction to be going on. So if you hope to take your money out in a few years, then putting your money in right now may not be the best idea, because we expect it to go down. And you're not in it for the long run, so you can't benefit from that long-term business cycle, because you want to take your money out in a few years. On the topic of kind of in the short term, another person that could fall into this is people that hope to retire soon. You know, you've benefited for so long from this business cycle of booms and busts, and right now that we're at the top of the market and you're going to retire pretty soon, I would hate for you to go into retirement and like the year before lose a bunch because we happen to go into a recession. So you would fall into the category of someone that is here for the short run, and then it might be a good idea to remove some of your investments into just safer, much more liquid positions that aren't really going to be affected too much by that recession. So those goes over 2 people who should invest and who shouldn't. Now I want to get into how should you enter this market. And there's no secret, you know, there's no look for this indicator and that's when you jump in. No, there's nothing really like that. But as far as getting into the market like this, when it is this hot, I like to do something that I call an investing schedule, meaning if you have a bunch of money, rather than throwing it in the market right now and just kind of hoping that it doesn't dip the next day, I like to break it up. So as you guys know, I am a big fan of having monthly payments or weekly payments or some investing schedule. So suppose you put in $1,000 every single month. Now, the great thing about this is even if the economy starts to dip down more and more, then each month you're buying it at a lower price. So that way if it goes back up, then you'll be able to benefit from that. Whereas should you take in a bunch of money and just throw it in right now, then as it just goes down, you're just losing more and more money. And that's kind of what happens if you put a lot of money in when you're at the top. So I'm a big fan of breaking it up and benefiting from an investing schedule. This has helped me a lot, especially during the correction that we had last December. I continued to invest every single week. I actually had more money going into the market. So you can kind of benefit from that dip. And this is kind of goes with that kind of buying the dip idea. So if you want to enter, I don't recommend throwing a whole bunch of money into the market right now. I recommend breaking it up and putting it into monthly payments or some payment plan to kind of spread out your risk. So we talked about who should invest in the market, we talked about who shouldn't invest in the market, and we talked about how to enter the market. But I didn't really talk about which investments you should be entering. So that's kind of what I want to get into now. As far as stocks that you should be entering when it's at the top of the market, I think it's important to look at stocks that do well during a recession. You can see my whole video on that. I went over kind of 7 specific stocks that do well during a recession. You can also go into different investments that have a guaranteed return, meaning investments that you know the return you're going to get when you're going into it. So that could be things like bills and bonds, different treasury securities, and certificates of deposits and different things like that. It's also important to diversify. We know that during a recession you don't want to have all your eggs in one basket, because should one company fall, you don't want it to ruin your entire portfolio. So you want to kind of balance it out and really diversify your portfolio. And then it's also important to look into things like high APY bank accounts. You know, you always hear cash is king, which I agree with, but I only really agree with that if you have it in a high APY bank account, meaning there isn't really much risk there and you're able to make some interest on your money, so it's not just sitting in your bank account. So I'd highly recommend looking into that. So those are different investments that you can kind of get involved with. And that does kind of round out this video. You know, we went over who should be investing in the market, who shouldn't be, how to enter, and when you enter, a few stocks and different investments that you should be looking into. Now, I've got a bunch of videos on that last topic about investments that are guaranteed, different things to look into, stocks that do well during a recession, so I recommend checking those out because I imagine there's probably a few questions you may have surrounding that topic. But that will wrap it up. That does kind of go over how you should enter the market, or if you should, because the market is really, really hot right now. And it is just important to realize that really in any market, there is money to be made. When the economy is going up, there's money to be made. When there's a top of the market, a lot of people are doing really well, a lot of money to be made. But what a lot of people don't know is that even when the economy is going downwards, there is money to be made. So no matter where we are in the business cycle, there is money to be made. And this also goes back to your investment strategy. You got to look at your portfolio, your financial goals, when you want your money, when you're going to be taking it out, to see if it is best for you. So that's why when people ask me, or really anyone else, should I be investing in the market right now? It's hard for me to say because I don't know your financial situation. If your goal is to make money 60 years out in this investment, then I'd say yeah. But if you want to take your money out in maybe 2, 3, 4, 5 years, then I'd probably say you should be a little more hesitant and hold a little bit more cash. So really it does come down to you. And speaking of you, I want to ask you a question. And I want you to kind of jump down in the comments below, and I want you to let me know what you think about, should you be investing in the market right now? Should we be hoarding cash right now, or should we be investing it? So I kind of gave my sort of 2 cents on this, and I want to know what your thoughts on it. Are you investing right now, or are you holding cash, waiting to kind of buy the dip when things dip down? So let me know in the comments below. I'll be going through there. I'll be responding to you guys. I'll be reading those, and I'm just excited to hear what you guys have to say. So let me know, and let's just have a good conversation. But that will wrap it up. Thank you guys so much for watching. I truly appreciate it. So if you're new here, I would love it if you would subscribe, and when you do, you'll find new videos here every single Monday and Friday. But that will round it out. Thank you guys so much for watching. I truly appreciate it, and hello to all my new subscribers. It is great to see you there, but that will round it out. And as always, my name is Calvin Rabb, and I will see you soon. Bye guys. Have an awesome day. You guys are awesome. Bye.